Good morning. Already mid-March. This week's price changes. May corn down 11 cents. May soybeans down 9. Obviously, the greatest weakness here in the corn market. Interestingly, the wheat market was higher, up 6 cents in Chicago, up 9 in Minneapolis as it's dry in hardwood winter wheat country. There's rain all around it, but it's been warm and dry in hardwood winter wheat country, Kansas, Oklahoma, Texas, the center of that. April crude oil up 16 cents, basically not much change. Crude oil at the lows of the year, basically. April gold, the opposite side, up $87, actually at 6,000 year highs in the gold market. The dollar still showing some weakness, down 0.447, but actually kind of slowing that decline. We had a rapid decline lately. So here we've got the corn market. We went from the lows in September, late August, to the highs, new yearly highs here in mid-February. And obviously, we've retreated rapidly since then. Actually, we're looking back at our sales. Progressive Ag made a 35% sale, 20% of the old crop 24 at 507, and a 15% of new crop, 35% sale there, and another at the old highs 515, sold another 20% of new crop and 20% of old crop. So 75% of a crop sold by Progressive Ag here in that top. As soon as we had that rapid decline, the next recovery, we sold another 25% Monday this week of corn. So basically some pretty aggressive sales of corn, 100% of that crop. But we got this recovery, but I think we've got problems coming in our potential tariff wars. And obviously, the trade wars, Trump trying to win concessions on the trade side and lower the U.S. trade deficit. The three main countries he's focusing on is China, Mexico, and Canada, all a huge trade deficit. I don't see how those three countries can win a trade war, but while we're fighting it, there's going to be short-term pain for agriculture, especially export-dependent crops like wheat, corn, and soybeans. And then there will be gain after that. We get those concessions and start exporting more. But here we've got the soybean market, obviously a little bit of a bounce, but soybeans, nothing like corn. Corn went back to its old high. But I think since the election in November, which occurred right about here, the market knew that these trade wars were looming. I think that's been suppressing soybeans and wheat prices for some time. Question now for the soybean market, if we enter a trade war, will we penetrate this support? And I think if we persist, we probably will go down and test these lows. Can we get much lower? Obviously, soybeans will already be very low, but we won't be selling any grain here while we're participating in these trade wars. That was the reason why, in the case of the corn market, we had to make more aggressive sales, certainly when we were up in this area. Even the recovery here, because 24 corn, we don't have much protection for it going forward. So you look at the wheat market, wheat just went to new recent lows lately on these tariff announcements. Actually, surprisingly higher this week, which of course was a hard red winter wheat weather-related issue. But already wheat is very well suppressed. You can see here's our November election. So the market obviously, well, corn was rallying $1 or more. Wheat did nothing. And so I think we've already got some negativity built into the wheat market for this trade situation. Here's the spring wheat market, same thing, bouncing lower, but actually showing some strength this week. Actually, it's interesting that wheat could do that. There is some situation in the Ukraine war. There was a peace offering, or actually a ceasefire offer to Russia for 30 days. Actually, Russia has taken back most of that region in Russia where Ukrainian went on a counteroffensive, but apparently the Ukrainian soldiers are surrounded. And it's not a good situation. Ukraine needs a truce because they're losing badly on the battlefield. Russia's taken a lot of ground back in the last 2 weeks. In fact, they're going to take all of it back in Russia very shortly. So Russia doesn't want the ceasefire. They want a permanent end to the hostilities. We're going to see how that goes, but it does look like that war is winding down. But for the time being, the hostilities continue. Crude oil bouncing down to the yearly lows or very close to it. Actually, this may not be a bad point. We get down into that $64 area. Probably not a bad point to start buying some of your spring fuel needs. But we could penetrate those lows if that war is over and Russian energy starts flowing to the rest of the world. Here is that gold market. What a new explosion higher this week, up $87. And obviously, Wednesday, Thursday, Friday, most of those gains. And why? Well, the United States Senate is approving. On Friday, they voted for cloture. It looks like some Democrats are going to vote with the Republicans to fund government, and we will have no shutdown. So gold runs to new highs. Mr. Schumer must have realized that it looks kind of stupid to shut down government because you can't spend recklessly. And the reason you vote like a drunken sailor, like Congress has been doing for the last 4 years, and the reason you want to shut it down is because Doge and Elon Musk is cutting all the wasteful spending that you like to do, and yet you're broke. You have no money. You have to pass a continuing resolution to increase the debt. Makes no sense. So obviously, I think that was a wise decision to from a Democrat side to vote for that continuing funding. But gold, seeing that the United States is going to continue spending like a drunken sailor, is going to new highs again. Talked about those sales. We've basically made 100% sales in the last, since January 29th, 40% on the old crop, and another 25% this week at that 470 May. I think it was about 472, 473. And sold 35% of new crop. But we are in a situation now. We've determined the crop insurance prices, 470 for corn, 4 cents higher than last year. We're $1.01 lower in soybeans and 29 cents lower in wheat. We're going to track acreage to corn this year. USDA's already estimated at their ag outlook 3.4 million acres. I think we're going to, in the end, this insurance price higher than last year for corn is going to attract acres. Right now, corn is traded at 451. We're already 4% below that 470. 95% price is 447 December corn, what you can get with your ECO coverage. A 450 corn put is 34 cents. Going through that same analysis for soybeans and wheat, 95% of 1054 core soybeans is 1001 November soybeans, with currently trading 1018, down 3%. A $10 put, which is what you get with your 95% ECO, 48 cents. We need to make these ECO decisions by Monday, the last day to sign up for crop insurance. That's why I'm talking about this. 622 September Minneapolis is 95% of 655. We're trading 629 right now, down 4%. 620 September Minneapolis put is 39 cents. $10 November soybean put is 48 cents. I'm basically showing you what it costs you to buy ECO coverage. This is Cass County, North Dakota, about $12 to $15 for most places, 180 to 200 bushel coverage. Corn at 180 bushel times that 34-cent put, that 450 put, is going to run you $60 to buy puts and protect that price at 450 or so. If you buy the ECO, it costs you $12 because they're subsidizing it 65%. And the price is already down 3-4% on all these crops. You're looking at, that's 5 times more money to buy protection with put options, which I sell. I'm a commodity broker, but I'm telling you, you're way better off buying this ECO 95 coverage for price protection as we go through these tariff wars. Soybeans, that put protection costs $19 an acre versus 4 times more to buy your own protection on the Chicago Board of Trade than it is in this ECO. Spring wheat, Minneapolis, $28 for that put protection on 70 bushel. ECO is running about $5 an acre. You've got a 65% subsidy and you're already dropped from that base price we established in February. I think you need to buy ECO and you're done marketing until we get above that February base price. We have a 95% put option on the revenue on our APH yield. And you do not lock in losses by selling below those crop insurance price levels. We're going to try and get break even. I think we'll get a weather scare. Maybe we'll have an opportunity to sell 470 plus D's corn, $11 plus November soybeans, or $7 spring wheat. I think you got to play defense. Probably need to get that coverage out on yourself, that ECO coverage before Monday, March 17th. So you buy your 75% enterprise coverage. You will only have 25% left at risk. Add your ARC County protection. I think that's probably going to pay this year. Government price support safety net is way better with your FSA farm program than we had last year. I think we're going to get 10% more payments out of that. You only have 15% left at risk. By ECO, you take another 9% out. You only have 6% at risk. That's not a bad risk management strategy going into what looks like could be a very poor year. And then if we can sell some calls, make some sales, we can come up with a break-even profit. We've got a marketing program to do that, our Harvesting ECO program. And if you have any questions about using that, give our office a call at Progressive Ag, or emails us, and we can help you with that. So the bottom line here is markets have taken a dive basically the last 3 weeks or so. And we have base price elections. The corn is probably the closest to break even at 470. I think USDA says 473 is the break even nationally on corn. We're going to get a lot of money from the government this year. Probably 25% of our revenue over direct costs of seed, fertilizer, chemical is going to come from the government. Our county payments, 10% maybe of our revenue. And if you get ECO, we might get another 9%. You'll probably get a tariff money of 5 to 10% because you're going to go through some pain during this tariff issue. We need that price protection of ECO. I think you're going to have to put that in place to do an adequate job of risk management, because you can't buy options for even 1/4 of the value, 1/5, 1/6 of the value. Or I should say 4 or 5 times, 6 times the value cost that you're going to buy that ECO coverage. So we got some issues coming up. Although there is some dryness in hard ruben wheat country, there's rain all around it, but there's no rain right in the center of that hard red winter wheat country where we need it. So that's just the first of many issues we're going to have this growing season, like we have every year. Maybe we'll get an opportunity to price some things, but I think the main message today is you probably are going to need that ECO coverage on your 25 crop. Then we have to figure out how we're going to get rid of this 24 crop, because I don't know if we're going to have many opportunities to do that on wheat or soybeans until we harvest another one. So it's going to be an interesting situation, particularly the less you have sold of 24 crop, the more you probably have a need to put that price protection in place as we go through these trade wars. Maybe the next 3, 4, 6 months, or even a year. I think it'll be less long than we endured with the China at the late, 2017, 18. That took about a year and a half, it seemed like, to resolve. But I think you need that price protection to go forward. Hope you have a great weekend and good marketing.